What is going on, YouTube? I am Germ here. So the crypto markets have been crazy this week. I mean, really throughout all of 2021, a lot of financial markets have been absolutely insane. The stock market's been crazy volatile, going up and down. Cryptos have obviously been seeing some huge swings, and this week was no exception to that. We saw some big crashes in a lot of the popular cryptocurrencies and a lot of the popular coins, especially as far as like the retail market and everything goes. But overall today was a pretty good day. You can see up on the screen right now, we're on coinmarketcap.com. We see Bitcoin up around 11.5% right now. And the broader crypto market, most things are up in the 24-hour period, but down over the last 7 days. But hey, you know, maybe today is the start of something better, is the start of better days. Maybe things are turning around a little bit. But actually, intraday, during the day today, which was May 20th, we actually saw a pretty big crash in a lot of different things. We got some news about a new potential, tax in the United States on crypto. Biden kind of announcing or teasing or throwing out the idea of a new crypto tax that maybe scared a little bit of people. So in this video today, I wanted to cover what exactly is going on. Is there some new big scary tax? Is there something to be worried about? Is there something you guys need to know about? Is there a reason to be concerned in the cryptocurrency market right now? Because we did see big crashes today for short times. Things did rebound well and still had an overall good day, but there's still a lot of intraday volatility, a lot of intraday movement, and those can be really good or really bad things depending on what your trading strategy is. But before we get into that, I just want to mention real quick, if you guys have not already, please take a second and smash that like button. I would appreciate it so much. Really does help me out, the YouTube algorithm. Also subscribe to stay up to date on all my latest content so you guys don't miss out on anything we got going on in the future. With that being said, let's get right into this. Remember guys, nothing is financial advice. I'm just giving my thoughts and opinions on the market, covering the stories, covering the coins, the cryptos, the stocks, all that stuff that you guys want to hear about. And yeah, that's what's kind of going on here. So we have this article from the Financial Times titled "Biden Administration Targets Crypto Transfers in a Tax Crackdown Plan." Now obviously that is a very scary headline, and when this story did come out, we saw a lot of the cryptocurrency market reacting instantly, whether it was people overreacting to the headlines, whether it was people rightfully reacting to the headlines. If this is a big crackdown in a big tax that is going to really affect people in the cryptocurrency market, maybe they're right in selling off a little bit and maybe decreasing some holdings if they're wanting to abandon ship and stuff like that. But if we take a look at like the Bitcoin chart, we see right here it was trading around 42, mid 41, and then we see it all the way down to about 38.5, 38.6, so that's crashing around 10%, a little bit under 10%, in just the span of like less than an hour, and that's pretty crazy. And you can take a look, and that's how a lot of the coins were going. Yes, a lot of the things are closely tied to Bitcoin. A lot of the things move pretty in line with Bitcoin most of the time, but we see here Ethereum was trading around 2,900 and it bottomed out at around 26. And that's another right around 10% drop in the middle of the day. We see this with a lot of the different coins, and again, it was all based around when this news of the Biden administration targeting a crypto transfer tax crackdown being floated out there in the media. So the kind of the sub headline here is that the proposal is to close the tax gap, which would require cryptocurrency transfers over $10,000 to be reported to the IRS. So this article goes on to talk a little bit about this. Obviously, cryptocurrency transfers of more than 10,000 will have to be reported to U.S. tax authorities under new Biden administration proposals. Again, just proposals, nothing official yet, not a done deal, that come amid a tightening of the regulatory environment for digital coins. So obviously, as cryptocurrencies gain more popularity, as they gain more mainstream appeal, as they become, bigger parts of financial institutional investments and things like that, as the bigger money comes into play, as the more powerful people come into play, there's going to be more regulation. There's going to be more in the United States and in most countries, there's going to be more taxing. There's going to be some control. Now obviously people in the crypto world are going to want complete decentralization. They're not going to want to have to deal with a lot of these things, but it is going to be very difficult to get around US tax laws for most people. And if there is money being made, if there's money being tossed around, the U.S. government is gonna want to get their fair share. They're gonna want to get their hand in it. Again, whatever you consider the fair share or whatever, that's besides the point, but they're going to get theirs in this whole equation, or crypto is almost destined to fail, is at least what a lot of people would tend to believe. There's obviously people on both sides, but again, just a proposal. And again, once the proposal came out, obviously the crypto market did react accordingly. As we get closer to maybe this becoming or not becoming an actual thing, whether it becomes finalized, legitimized, whatever, maybe we can see more reaction to it. Maybe we'll see another crash back down. But again, just a proposal. The market did go down a little bit, but it rebounded very, very nicely. Again, it's just a proposal. And then as people began to digest the information, then you start to see more of the real reaction. Obviously, there's a million different variables at play and everything. But again, the immediate reaction was a sell-off, but throughout the rest of the day and even now, we're still seeing that consistent trickle up, which I think, often when big news stories come out, when big headlines come out, yeah, people don't take the time to check them out, to actually fully digest them. The market tends to overreact in the short term, and you see this big drop off again in less than an hour. You have people that set stop losses, you have algorithmic trading, you have a lot of things going on. People seeing a bad headline, taxes. Nobody wants to hear that. Nobody wants to see that. This is something we see in all different kinds of markets, even in something like the stock market, where it's as big and regulated and everything that is, and all the crazy money in it. Still, headlines can move companies very, very quickly, and very, very with a lot of volatility. So again, especially in something as volatile as a crypto market, you're going to have that times 10 times 100 magnitudes of those effects. And we did see that, but sometimes you want to look for those opportunities. Sometimes when a headline comes out, actually take the time to evaluate it for yourself. Take a look, see what you think. If you think this tax bill, one, is just a proposal that'll never come to fruition, if you think this tax bill is not as big of a deal as people are making it out to be, maybe you can see these quick flash crashes as buying opportunities and as times to accumulate at an awesome price. Or maybe you think people are underreacting to the news, and maybe you want to go short on something, or maybe people are underreacting to good news. By really looking at the news, forming your own opinions, reading the headlines, reading the whole articles, figuring out everything you can really start to make educated decisions. And again, if you have a leg up on the competition in that regard, if you think you understand things a little bit better, that's where you can really start to make some really, really big moves. So anyway, the U.S. proposal, unveiled a day after China signaled the regulatory crackdown of digital currencies, is part of a broad set of proposals aimed at curbing tax evasion. So, obviously that's a big thing. We had the China news earlier in the week, and now we're having some U.S. news. It sucks being in the crypto market when it seems like we have all of these different countries and all these different bad news stories coming out at once. All this FUD in the air, sending all our favorite coins and all our favorite cryptocurrencies crashing down. It really, really does suck. But again, if you're in the accumulation phase and you're still establishing your positions, this can be a very, very good time. But it's always annoying. We've seen this in all the other crypto runs where as soon as things are going good, you're always going to have bad news around the corner. You're always going to have these same stories. China, different countries threatening to ban crypto, actually banning crypto, not banning crypto, whatever, and then taxing all this stuff. But again, this U.S. plan is just more focused on aiming to curb tax evasion, which is obviously something that shouldn't be too bad. Like this article says, the price of Bitcoin, the most actively traded cryptocurrency, fell 5% after the U.S. announced its proposal. I would even argue it fell a little bit more than 5%. When I was looking at the charts and stuff. But again, they just kind of picked the arbitrary number of 5% here. It did follow a few chaotic hours of Bitcoin trading on Wednesday when China's central bank warned financial institutions about accepting crypto as payment or offering related services and products. Price of Bitcoin fell as much as 30%. So yes, we did see, that absolute bloodbath of a day earlier in the week this week. And that was a mess, and that was awful. And, that's when a lot of people really got one of their first big tastes of the volatility that the crypto market can have. And you really got to see if you got diamond hands or not on those days. And you also got to see what buying the dip feels like if you are really going to be dip buying. And, if you're buying the first dip, the second dip, the huge dip. But yes, the markets can move crazy like that. And yes, they absolutely did. So this story, the Biden tax proposal was definitely not as big as the China story. And also did not have as big an effect on the markets, but still is something very, very significant and definitely a story you're going to want to follow and be interested in following because, whenever you see things about taxing and extra taxes and extra costs and extra fees, that is going to, possibly have a negative effect or outcome on a lot of the prices of these things, especially in the short term. Again, in the long term, it shouldn't necessarily have too big of an impact, but easing of regulations is always going to be a positive story, and tightening up of regulations is usually going to be something that a lot of people in the crypto world especially are not going to be too excited about. So We got to hear from Jay Powell, which is always awesome, chair of the U.S. Federal Reserve. He weighed in on cryptocurrencies on Thursday and said that U.S. authorities should be paying attention to private sector payments innovators who are currently not within the traditional regulatory arrangements applied to banks, investment firms, and other financial intermediaries. So obviously, they're just trying to get the rules, regulations, at least that's what they're saying. You know, maybe you disagree, maybe you agree, maybe not, but they're just kind of saying that they are trying to get things up to speed, get things in line with the rules, regulations, taxes, everything that is across the board with all these other institutions, and just making people in the crypto market have to play by the same rules, not have other kind of advantages and things that, you know, maybe they don't deem so you know, within their rules, obviously. So he singled out financial operators offering so-called stable coins, those whose value is tied to the dollar, as posing particular risk to financial stability. The U.S. Treasury said crypto poses a significant detection problem by facilitating illegal activity broadly, including tax evasion, echoing comments from the European Central Bank this week, which said that cryptocurrency's potential use for illicit purposes were a cause for concern. Now, obviously, you know, the old crypto meme is that, yeah, people just use it to do illegal things and yada, yada, yada. But, you know, tax evasion and using cryptos to get around tax laws and stuff like that is, you know, a legitimate use case and a legitimate threat. And again, governments are never going to like that. Governments are going to want their fair share of the pie, especially, you know, when you have other people paying their fair shares, and then you're just kind of skirting around the laws and stuff with crypto. You know, that's never going to go well with especially with a government like the United States. So getting into the actual proposal, the U.S. proposal is part of a Treasury report showing how Joe Biden's White House plans to close the so-called tax gap by strengthening the Internal Revenue Service. The report is the latest in a series of White House proposals that would lead to the wealthiest Americans paying significantly more tax. The Biden administration intends to close the tax gap, the difference between taxes owed to the U.S. government and those actually paid, which, you know, I think most people would be all for that, by investing nearly $80 billion into the IRS and expanding the Revenue Service's ability to identify wealthy individuals who avoid paying taxes. So again, this thing is just targeted over transfers over 10,000. So, you know, it's not going to affect most people in the crypto market. You know, obviously, especially as crypto prices start to go crazy, yeah, more and more people are getting into that $10,000 range. But I don't think most people are very frequently making transfers of over $10,000 with crypto. So overall, I don't think this story should be too big of a deal. You know, I definitely don't think this was something that warranted a 5% drop or a 10% drop or even an 11 or 12% drop that we saw in some of the cryptos because of it. Yes, it is scary. You never want to hear new taxes. You never want to hear new regulations. You never want to hear new just kind of laws and stuff surrounding crypto, because again, that is so much against what crypto stands for. But again, is this really going to impact and affect most people, especially long-term crypto holders, especially people who are not making frequent $10,000 plus transfers of cryptocurrencies? And even if they do, you know, just having to pay taxes on that like you would have to pay on any other money transfers or anything like that, you know, I don't think it should be too big of a deal. And people who kind of bought the dip in this instance obviously made out very, very well. We'll see what happens the rest of the day, the rest of the week, and how these stories kind of progress, if these things change, or if they, you know, become closer to being finalized and all that stuff. But that is pretty much it for this video today, ladies and gentlemen. Thank you so much for watching. I would definitely appreciate if you did drop a like on this video. Leave a comment down below. What do you think about Biden's crypto tax plan? Do you think it's something we should be worried about? Do you think it's something we should care about? Or do you think this is all big overreaction and who cares anyway? That's kind of like a non-story. I'd love to hear your guys' thoughts and opinions. Subscribe to stay up to date on all my latest content. Hopefully I catch you guys in the next one. But until then, peace!